You can drive up and down the road outside and speed every day of your life, and it only takes once for a cop to see you to pull you over, and you're going to get a ticket. I'm telling you, you can hide cash all you want to, but if they catch you, you'll be on your own. It's my job to make sure, one, that you got good data to make decisions, and two, to shield you from these type of problems so that you can continue to do what you like doing. But if you get hemmed up by the IRS, that's a problem, right?
Don't want to get hemmed up by the IRS. Get that calculator shoved up your ass.
Hey.
Today, we are here to talk about taxes. I know that is not everyone's favorite topic, but it is something that we all have to deal with, right? The only two guarantees are death and taxes. So I wanted to interview a tax professional, ask a lot of the questions that I get on Instagram. In fact, I did a poll on my stories. I got some people asking questions. So we go and answer some of the most common questions that tattoo artists have about taxes. Plus, we nerd out a bit on taxes. Us money nerds, we just tend to dive deep and have fun. So my hope is that the energy that we have around taxes actually gets you a little bit excited about this stuff. It's not scary. It is only scary when we don't know. The unknown, the unforeseen, that stuff is what makes it scary. But the more you understand it, the more confidence you build around taxes, the easier it gets. And the more you realize that there are a ton of tools available to everyone to save money on taxes, to make it easier for you to keep track of things and not go through the nightmare cycle every single year of gathering all your information and it's all mixed up, and then you hand it off and you pray to the tax gods that you don't owe too much money. This episode is for you if you're looking to end that cycle. And I actually found out about this particular guy, Adam, from another tattoo artist, Hip, Justin Sheltman. If anyone knows him, shout out to Hip. Thank you for introducing me to Adam. They've been working together for a while, and I've had several conversations with Adam before this podcast that really let me know the type of guy he is. He's a solid dude. I think that you should feel comfortable talking to your accountant like you're going to get the answers you want. You're going to be respected. You're not going to be belittled. You're not going to be just viewed as a number on a spreadsheet, but a real human being. That's what I think you need. I haven't worked with Adam personally, but I can definitely give him my approval of, just a solid dude and very knowledgeable. And, if he doesn't have an answer, he knows exactly how to get to the answer. So check out this episode with Adam from Nomadica Tax Solutions. Welcome to the Artful Dollar. We are here today to talk about tattoo taxes. And I have with me a accountant. You're working on the CPA, right? But you're an accountant.
Yeah, yes, absolutely.
I have with me today an accountant who I met at the Evergreen Tattoo Invitational about a year ago, because I know they're coming up on that again in a week or so. But you also came highly recommended through my man Hip, who, if anyone knows Hip, he's a solid dude. And I like getting that firsthand experience of, okay, he worked with you. He likes the experience. I've gotten to chat with you a couple times. And honestly, I always tell people, like, when you pick someone to do your taxes, you should feel as comfortable talking to them as you feel talking to a therapist.
Absolutely. Agree.
Because I've heard so many nightmare stories about accountants, tattoo artists going to accountants and hearing, weird advice, or they're not getting their questions answered properly, or they're just not being treated with respect or whatever it is. I mean, I've heard a number of people getting done dirty by their accountants. So I'm glad to hear that you had experience working with tattoo artists. And that was actually a question I got the other day, was someone asked me, Ryan, is it important that my accountant has worked with a lot of tattoo artists? How important is that? And I said, on the one hand, business is business, right? If you've done self-employed, taxes, you should have no problem working with a tattoo artist. But knowing the nuances to the business is always going to be helpful. And in general, having some familiarity with tattoo artists. So what's your take on that?
I think it also depends on how much of a role you want your accountant to play in your affairs in your business. So if you're just looking for someone to do taxes, yeah, and, any tax accountant is going to work, right? But knowing some of the obstacles that y'all as artists run into and y'all as shop owners run into, it allows me to be able to provide some feedback and some consultation that maybe just a regular tax accountant that works with anybody can offer, So yeah, certainly knowing some of that background is beneficial for y'all.
Yeah, and I don't even know if I said your name, Adam. I didn't say your name before, but Adam from Nomadica Solutions, right? That's your company.
That's right.
Okay, so you've worked with tattoo artists. You have some experience, not just with obviously the numbers, but the mindset that goes into and some of the nuances.
Sure.
We were actually talking about someone. I had been sending a couple of people your way, and someone you worked with that you were saying there was maybe some nuances to the way that they were getting their filings done. Remind me again, what was the situation?
Yeah, so they called at your recommendation, and they had some prior years that they hadn't filed, so we needed to get them caught up.
Which is very common. I just want anyone listening to this to know how many times I have seen that, dozens and dozens of times. It's not, everyone, there's a lot of shame around not filing. I just want you to know how normal it is. Like, there's so many people out there, not just tattoo artists, that haven't filed in multiple years. So there are ways to handle that, just so anyone knows that. Yeah.
Yeah, Ryan, and I don't want to digress too much, but you're right, dude. And so many people, they get behind. And once they get behind, the weight of being behind keeps them from moving forward. And they just keep going deeper and deeper until they're in a situation that I don't know how to get out of this.
And not dealing with it doesn't make, it's not like, okay, well, when I deal with it, then I'll owe money. No, you owe money now, and there is interest and penalties that accumulates whether you file or not. That's right. So the sooner you deal with it, the sooner you know the size of the problem, right, and the easier it is to handle. There is no benefit to saying, well, I'll deal with that in next year, because, right, it literally just gets worse and worse the longer you wait. So definitely seeking some help from Adam, or if you have a tax person you work with, definitely get that handled as soon as possible. But yeah, so you were working with this artist.
Yeah. So they called, had some years they needed to get caught up. And essentially their goal was, I got the feeling that, they were probably a little younger. I think they've been tattooing about 5 years. And when I say younger, they're younger than me. So they're probably less than 40 years old, right?
Okay.
And what they said was that they had goals and aspirations that they wanted, right? They wanted to buy a house. They wanted.
Now, do you ask people those questions?
I try to, unless they offer it up, then I just let them go.
Yeah.
But
I just think it is important to know what is the end goal, not just file your taxes.
That's right.
And let me tell you, so many accounts do not care. They don't ask you those questions. Yeah. They couldn't care less. They're like, okay, give me the numbers. They're just paper pushers, essentially.
Yeah. I mean, ultimately, when they call, like, hey, I just want to talk. Like, tell me about yourself. Tell me about your situation. But I'm not going to ask you, what your favorite animal is. I'm going to try to ask questions that are tax related and try to deduct from there what it is that your goals are and what it is that you're striving for. And then, through some of that, I'm going to ask, what kind of pets do you have or something? Because it's one of the benefits of my job is getting to know people. Right?
I think it's so important when you're dealing with money. It's not just a number on a spreadsheet.
Yeah. I mean, I've spent many tax seasons in an office, wearing a tie, wearing a suit, shoes and whatever that nobody would ever even see me wear, and filing taxes for businesses that could care less what my name was. And that's fine. And I will certainly continue to do that. But one of the benefits is being able to help people achieve their goals by being compliant with government agencies.
Yeah.
And I hate to say that, but you're going to hit some roofs and you're going to have major obstacles if you're going to operate your business and not be compliant.
Yeah.
Ultimately, I'm talking with this person and they're telling me about their situation. So I'm learning stuff about them. And so they're behind on taxes. and they offered up, like, I want to buy a house, and I know that I can't unless I've been filing taxes, right? And I'm like, yeah, I mean, essentially, yeah.
Unless you got all the cash up front.
Hey, even if you got cash up
Even
front, most of your
exactly.
loan people are going to want to know where it came from.
Exactly.
You know?
Yeah.
So, they're telling me, they're filling me in, and they started telling me about the shop that they're working at. And I always tell people, I'm going to assume that you're going to work with me, even if you choose not to. But I want to continue this conversation as if.
Yeah.
So I asked what their 1099 was going to look like. What kind of income are we talking about? And they told me, they were roughly, I'm just going to make a number up for illustration for this story, but they basically told me about $60,000 for the year is what their 1099 was going to look like. And I said, okay, so that's before or after you paid the shop your rent or their commission percentage or, whatever they chose to call it.
Yeah.
And this person said,
we call it shop cut.
Shop cut. There you go. Okay. Shop cut. And they said the 60,000 was after the shop cut. Okay. And I said, so is it a percentage or a flat rate? And they told me it was a percentage. It was a 60-40. And I said, okay. So you took home 60%, and therefore it was 60,000. So they kept 40,000. And they said, well, yeah, I guess that's true. And I said, all right. So actually, you made 100,000, not 60. You made 100, but you paid 40 in shop cut, right?
Right.
And the question immediately became like, well, I guess I never thought about it like that. And I said, sure. But when you're going to apply for a loan, like those kind of things matter, like they're beneficial. So, this conversation just continued to go on, and I learned some stuff. And knowing folks like you and HIP and other clients that I work with, I was able to kind of dig and ask a few questions to find out what this person's real motivation is.
Right. It's also that moment that you realize I paid like $4,000 a month for rent.
Right. Hey, that's one of the key things, aside from this conversation, that good bookkeeping and tracking does for you is it provides you information, and information is powerful when it comes to making decisions about your business.
Yeah.
Okay? So, yeah, you pay 40%, you leave 60%. So if you walk around thinking you make 60,000, like, that's great, and you can make decisions based on 60,000. But knowing that you paid $40,000 in rent last year, what does that tell you? What kind of information does that provide for you, and what kind of decisions can you make knowing that?
Yeah, and was this, obviously the purpose of the shop cut is there's a few things, and everyone just thinks that a shop owner's running away with your whole 40%, which is far from the truth.
Sure.
And a lot of shops I talk to are kind of just breaking even, honestly. Yeah. Maybe they're making 10-20% margin after everything, but usually the shop is doing some marketing and bringing in clients. Was that the case with this particular artist?
So I did ask, I said, what is provided to you? And this was not in a conversation to attack the shop owner.
Right.
Because in terms of that 60,000 that now we're looking at income, that person asked me, well, what can I start, deducting from that? And I said, okay, so any, ink, tools, machines you're buying, chairs, any tables, armrests, any of those things.
Computer software, subscriptions.
All that.
Yeah.
Hygiene stuff. I know a lot of artists that, go all day and provide, 10, 12-hour sessions and therefore buy their clients food.
Yeah.
I can use that. And honestly, like meals is only, you can only deduct a percentage of your meals. However, because y'all are providing them to their clients because they need it to keep their blood sugar up, like, hey, I will deduct all 100% of that because that's important. That's for your clients. That's important.
Yeah,
so,
I always feel with accounting, it's important to know how to bend the rules without breaking them.
That's right. That's right.
Yeah.
And what it all comes down to is, can you make your case if anybody ever asked you?
Right.
Right? And knowing a tattoo artist and knowing what it is they're doing with this food or whatever it is,
right,
and knowing that it's a crucial part of the process, it's a different conversation than I just bought a client lunch because I was thanking them.
Right.
Different.
Yeah.
So I'm telling this person about these deductions that they can use. And that's when they informed me that they provide all their own machines, they provide all their own stencils and ink, but the shop does provide the hygiene products. So paper towels, I don't know what all chemicals y'all use.
Which is pretty standard for the shop to provide, most of the supplies, but like things like machines, needles, stuff like that, usually the artist will buy.
Okay. And then I asked about the marketing piece because I know that is pretty significant. And that person informed me that they do no marketing, that basically each individual artist logs into that shop's social media pages and makes posts of their own. And therefore, all the clients that come in are not walk-ins for the shop. They're all coming specifically to book with that particular artist.
Gotcha.
So, yeah, now we're laying out how the business operates and how things going. And, Ryan, I'm not here to tell people, like, you need to leave your shop owner and go start your own business. Like, that's not the point of any of this. The point is for me to provide you with data to make a decision that you want to make based on your goals. That's my job.
Yeah. And, there's so many nuances to, and this is an age-old question, like, do I stay at the shop and pay the percentage, or do I go off on my own?
Yeah.
The other thing that a lot of artists don't understand that you're paying for when you're paying a percentage to the shop is you're paying to not assume a level of risk that the business owner, the shop owner, is assuming. That's essentially, so any type of investment, whether you're investing in your business or investing in a stock, you're assuming a level of risk. And in exchange for assuming that risk, there is a potential reward, right? So the shop owner is on the hook for the rent, whether or not you do tattoos or not, whether or not you come to work, whether you decide to go off and they can't up and leave the way you can as the artist.
Sure.
So that's part of what you're paying for is I don't have to take the risk that you're taking. And in exchange for that, I'm going to pay you instead of you're either going to pay more money or you're going to take more risk. That's it.
Hey.
So a lot of artists think, oh shit, I just paid the shop $40,000. I could find that's close to $4,000 a month. I could find a space for $1,500 a month or $2,000 a month. Let me go do that since all these clients are mine. But you do have to, and sometimes that is a brilliant, great financial decision, but you have to consider, okay, I have to now assume this level of risk that I didn't have to assume before. Do I have to get other artists to come and rent a booth from me in order to pay rent? Some artists all team up together and they go, and I've heard that story a million times, where 3 artists all decide they're going to do their own partnership. Sometimes, a saying I heard is the only ships that sink are partnerships. They go out, they start their little tribune, shop, and then 2 of those artists are like, actually, we're going to go off and do our own thing, and then they leave the one that they're on the lease for whatever reason, because they're the only ones with credit, or they're the only ones that have been filing their taxes, and the other 2 haven't, someone gets fucked over. So these are all risks that can happen in the game of business, and it is a game, and you have to know what it is that you're paying for. So for some artists, they might not want to assume that risk. Paying that $40,000 might just be buying them the peace of mind, knowing that if they have a slow month, well, at least, they're not going to make money, but at least they don't have like rent to pay at the shop. They have their personal rent. It's all these types of things that you have to be thinking about in making that decision. But like you said, having the numbers, having the data is going to help you make an informed decision if and when you do decide to go off on your own and start your own business.
You said a lot there, man, and I think you hit it. And one of the important things to think here is everybody wants to know what the right decision is. And ultimately, like, it's not the right or the wrong one.
Yeah.
Ultimately, it's what are you willing to do? What is important to you? Like you said, is less risk more important to you? Is it easier for you and therefore you're willing to pay more money for your, to have that less amount of stress?
Yeah.
Or are you an entrepreneur and you just want to go for it and have to deal with that headache of being a shop owner? Like, what's more important to you?
Yeah.
And for my role, I'm here to provide you with numbers and, that piece of it and do, some amount of financial analysis. But yeah, sometimes you need that mentor who owns a shop. And it's also important, like your location, right? So you can get advice from somebody that lives in Brooklyn, and it might not be the same of what it is for somebody in Miami. So being able to consult with as many people as you can is definitely important.
Yeah. And
I'm just a small piece of this.
While we're on the topic of, percentage and booth rent and all that, I will say I've given this a lot of thought, and I've seen a lot of situations. My opinion is that there's the two best ways to do a shop booth rent, split cut, percentage rate, whatever you want to call it, are either to do booth rent and have the shop know that, okay, if all my booths are rented out, I'm able to earn X amount of profit on top of all my operating expenses. Or do a percentage, and a lot of shops are giving artists higher percentages, like 70%, but a lot of shops that I see giving out 70% are barely able to pay their own bills. So I feel the best solution for any artists or shop owners listening, the best solution in my opinion is to pay the artist either 50% or 60% up until a certain amount, and then the artist gets a 70 or 80%. So maybe you start at 50% up until you've paid the shop $1,500 for that month, but then you jump to an 80% for everything after that for that month. Those are the types of models that I think work better than just a flat fixed percentage rate.
Hey, that's pretty solid, and there's definitely some like motivation there to like drive your artist to want to do more and want to grow themselves as a contractor or as an artist in your shop. Because the more you do, the bigger piece you're going to make, right? And I think that's huge. Like that's great.
Absolutely.
Yeah.
And so this artist, whatever it was, 60% cut. Yeah. They really made $100K. Now, does that, if they claim on their taxes, I made $60K and then they deduct everything, or if they claim I made $100K and then they deduct the shop cut plus everything, they're paying the same amount of taxes either way.
That's correct. Because when they show up with their 1099 at 60, we're going to claim that they made 60,000, right? And then additional deductions after that. If they would have showed up and had the 1099 for 100K, 40K would come off the top for, the shop cut, commission, rent, whatever you want to call that. So yes, it would net out to be the same. Now,
is there a benefit to one or the other?
I mean, the benefit, again, is just what your goals are, right? And knowing that this person is wanting to buy a house, or, whatever it is that person's going to do in the future, when you apply for a loan, they're going to look at several things. One is going to be your total amount of sales. The next piece is going to be your total AGI, which is all sources of income. And
what's AGI for anyone who doesn't know?
Adjusted gross income.
So what does that mean? If you break that down, pretend I'm a golden retriever. Explain to me what adjusted gross income is.
So I don't remember the formula for all of it, but I'm going to say it's all sources of income.
Right.
So if you're a shop owner and an artist, it's going to include all of your income, not just one stream of income. Right. Okay. And then it's also going to remove out some of your expenses. And I had to look this up because
I don't blame you. And look, a good accountant doesn't know everything off the fucking top of their head. I was actually watching a video the other day about accountants worried that AI is going to replace them. But the truth is, accountants that know how to use AI are going to replace accountants that don't know how to use AI. That's the truth.
That's right. And ultimately, when it comes to things like Google and AI, all it's doing is replacing all of those books that you used to see in your accountant's office. Right. I don't carry, a 32 set of encyclopedias and tax laws.
Plus, they change the tax code every fucking year.
That's right.
A good accountant knows what questions to ask AI. Right? You could give me AI, but I don't know all the questions that I'm supposed to ask it to get the right response that's going to best serve me.
Absolutely. Yeah. So your AGI is going to be all sources of income piled into one, and there are some things that can knock that down, and it's looks like educator expenses, student loan interest, and retirement contributions. Mm-hmm. Okay, so it's a very limited amount. So that's your AGI.
Yeah.
So loan originator is going to want to know total sales. It's going to want to know total AGI, and then it's going to look at what you actually net. So after AGI and you've paid out your taxes and you've paid out all your deductions, what's that bottom line? Because what they're looking at is a whole picture. Okay. So if your sales are here, what's it going to be in 5 years for your industry? Is it growing? Right. AGI is going to look like this. He makes she, or whoever makes money here doing this and makes money here doing this.
Right.
So if either one of those falter, we want to know what that looks like. So that's why we measure AGI.
And so all that is being considered when you're applying for a mortgage. I think, and some things are different depending if it's a commercial mortgage or a personal home.
For sure.
It could benefit someone to claim $100K, deduct it, and then pay the net, even though they'd pay the same amount of taxes either way, because it's showing that there's a higher gross income.
Right. Yeah, and then the next piece is going to be what you actually net out, right? So what's your AGI after you've taxes? Then you've got a bottom line of how much cash you actually walked away with for the year. And that's going to be important to know. Can you make the payment on whatever it is you're going to take a loan for? Right?
Yeah.
Because here's a piece. If back to the 60,000 compared to the 100,000, if we're telling the bank that we make 60,000, it's going to look considerably different than when we tell the bank we made 100,000 minus 40,000 in rent. Because in 3 years, if that person then decides to go out on their own, or maybe leave and go to a different shop that has a flat fee in rent, or whatever that looks like, now we're comparing 100,000 of income to 100,000 of income, but less expense.
Right.
So you show a pattern of development and growth that way.
Right. They want to see not just 1 year or 2 years. They, especially if you're self-employed, filing a Schedule C, 1099s, you want to show that pattern of growth over time.
Absolutely. And no, I'm saying all this and I'm giving some big paraphrases and some very basic, simple concepts.
That's what we want. We don't want the high level stuff. Break it down. Pretend I eat crayons and just spoon feed it to me. Yeah.
And good, because there's people that actually process these loans that are probably way smarter than I am. And they would say the same about me, but that's how it is, right? So, yeah, I'm just giving some very basic paraphrased information. None of this is financial advice.
Right. Nothing said on this is tax advice, financial advice. Seek advice for your own particular situation from Adam or another, tax or financial professional. We had a couple questions on Instagram that I thought would be good for us to go over. Some of them I feel comfortable answering, but I feel, going right to the source of truth that we have here. So apparently 88% of listeners have not left a review or subscribed. And I'm going to get right back to the podcast in just a second. But if you have found this episode helpful and you think that other people would benefit from listening, then all I ask in return is please just leave a quick review and subscribe. It'll take just 1 minute and it might help other tattooers and other artists find this podcast and help them out. So please, it would mean the world to me and it might actually make a difference for someone else. Thanks. So first and foremost, and I love it, I was like, ask any question. There's no dumb questions here.
Of course.
Someone simply asks, what exactly should I be keeping track of? Expenses? Income? Anything else? Like, what am I tracking? What is it?
Yeah. So a couple things. If we're talking about tattooing specifically, let's just talk about the art. Yeah. You definitely want to be tracking your revenue, your sales, how much money you're bringing in, because there's a couple of pieces there. There's actually some states out there that require you to pay sales tax on tattoos.
Yeah.
Okay.
New York City requires, not New York State, but New York City requires that. Yeah.
Odd. Yeah. I know the state of Ohio does too. So I have clients in Ohio that have to pay sales tax on their tattoos.
Right.
So in terms of your federal tax return, though, which is what we're talking about, you want to keep track of your revenue, right? And that can get messy. If you're collecting cash or you're collecting off Clover.
Well, you don't have to claim cash, though, right?
Oh, you absolutely should. You absolutely should.
But why? Why?
The IRS, and this is not my judgment, this is not my opinion. The IRS says any money that you make is taxable. Period.
Yeah.
Whether it's cash, whether it's a check, whether somebody comes in and
But if they don't know about it,
well, listen, you can drive up and down the road outside and speed every day of your life, and it only takes once for a cop to see you to pull you over, and you're going to get a ticket. So I'm telling you, you can hide cash all you want to, but if they catch you, you'll be on your own, right?
the other thing is, again, and I always tell people, like, do what's best for you. Like, if robbing banks really gave you the best possible life that you could possibly live, then go rob banks, you know? I just don't think that I would feel good, or I would probably stress a lot. I'd think the cops were after me. So personally, you know, for most of my tattoo career, every dollar hit. And the reason why was because I was looking at long-term goals, like buying a house, like retirement, you know, like growing my business, like qualifying for a business loan to invest in my business, to grow my ability to make more money. And what I would pay in taxes on it got to the point where I didn't want people to pay other than credit card, because it was just easier to track with a credit card processor. It became more convenient, and it didn't incentivize me. People would be like, oh, do you want me to pay cash? Like, honestly, I don't care. I'm going to claim it all anyway, because I'm going to play the tax game in my favor for my long-term goals. If you're not claiming all your income is cute in your 20s. It's like a short-term, yeah, that's nice. But when you get to hit your mid-30s and 40s and you're like, fuck, I've only been claiming $30K a year. Now I want to buy this house. You're fucked.
Right. So, yeah, and I tell clients all the time, it's my job to make sure, one, that you got good data to make decisions, and two, to shield you from these type of problems so that you can continue to do what you like doing.
Yeah.
You want to continue to make money. You want to continue to do art. You want to continue to run your business. You want to continue to buy jet skis and hats and whatever it is that you like to spend your money on. But if you get hemmed up by the IRS, that's a problem, right?
Don't want to get hemmed up by the IRS. Get that calculator shoved up your ass.
Hey,
no lube.
There used to be a thing that folks used to say that there's no such thing as debtor's prison, but there is for tax evasion. So, like, you can go to prison for tax evasion. That's a real thing.
It is a real thing, but what's the like, you got to do, that's not just, I didn't pay my taxes for 3 years and now you're going to jail.
Yeah. Hey, you're right. I don't mean to scare a bunch of people right now thinking that they collected.
I used to be scared of that. I used to be like, oh my God, they're going to see I wrote off this fucking thing that isn't really a write-off and now I'm going to go to jail. No, it's not like that. But if you are making a clear, conscious decision to evade taxes to a certain degree, yeah, you could be facing time.
Ultimately, like, no, you're not going to go to prison. Like, you're right. That's going to be some big stuff, right?
Yeah.
But if you get audited and they do determine that you've been not claiming income or claiming extra deductions or whatever that looks like, they're going to fine you and you're going to pay penalties.
I had a friend. I'm not going to call him out here, but he basically would just like throw like $10,000 or $20,000 in deductions on top of that.
Yeah.
Just throw it, just like not even explaining it. I'm like, dude, you can't. And he's been doing it for years, and I'm like, God bless you, man. I hope that goes well for you.
Yeah, and you know the thing is, you claiming these deductions.
I know someone's listening to this podcast. They're like, oh shit, I could just throw another $10,000. Yeah,
and they are. Don't do that. And yeah. And it can reduce your liability. You can save some money in tax, but I assure you that the IRS has calculated this, that if you were to claim that many deductions, when it comes time to penalize you, you're going to pay more than any money you saved.
Yeah.
Eating on taxes.
Absolutely.
So this wasn't a scare tactic, but...
Right. No, but a little bit. I always tell, like, when I go to the dentist, I always tell the dentist, I'm like, scare me into flossing. Just terrify me. Like, tell me the horrible shit that's going to happen to me. Just, I need to be scared. I'm not flossing, so.
Okay. So there's several things here to share. Your original question, what should I be keeping track of?
Yeah.
Keep track of your revenue, right? How you're doing that, whether it's Square, whether, Clover. I have my clients, like I have a couple of bookkeeping softwares. I use QuickBooks mostly. and I track that for them essentially, right?
Yeah.
And then in terms of deductions, anything that goes into your tattoo, okay? And we
Right.
have a category for that, and that's called COGS, cost of goods sold. So anything that goes into that tattoo is going to be considered cost of goods
Right.
sold.
Needles, gloves, things that are consumed in the creation of, right? Your
That's right.
tattoo machine is not cogs because
right.
you're going to use that over and over again.
That's right.
But
That's right.
generally, cogs is everything that is consumed in the creating of the service that you provide.
That's right. Absolutely. And then that gives you a, it provides you with a bottom line. Okay. And then from there, anything that goes into your business for you to operate as a business also becomes a deduction. So you mentioned before softwares. If y'all got Adobe Create, or if you bought a new iPad, or if you bought, some various things. Oh, some of y'all that do the convention circuit, if you go to tattoo conventions, airline tickets, hotels, you rent a car, your meals while you're out, the admission fees, all that stuff goes
Right. The rule, I believe, domestic travel is if 75% of your trip was for business purposes, then 100% of the travel and the meals, right? 100% of the travel meals
Right. That's
are
right.
deductible.
That's right.
If 75% of your trip was qualified as business purposes, yeah.
That's right.
Now,
Yeah,
if it's
well,
international, it's 25% of your trip,
yes.
which is nice. If you go out, I just went to Costa Rica with Dan Cuban and Mike Chambers and Ben Shaw, and we were filming content for a business thing that we're going to be doing. But, we were hanging out on the beach. We were doing stuff.
Sure.
At least 50% of that trip was for business purposes. So we get to write off the whole thing.
Sure. And then, of course, accounting fees comes into that. So if you're paying somebody like me to do your bookkeeping, your taxes, or wages are expensible. Obviously, I have not included every item, right? Because every business is going to be a little different. But that's kind of a general rule.
Can a tattoo artist write off getting tattooed?
That is an interesting question. So I've done some research, and there could be some argument and there could be some research where if you were trying to follow a new process, not a process, but you were trying to, maybe you want to start learning about American tradition,
Or you want to educate yourself on some style that someone's doing. Maybe they just have more experience than you.
Yes. Something where you were following a mentor trying to do something, you could probably make that work. You could make that argument.
But if you're getting your back tattooed, you can't really learn too much from that.
I mean,
Do you need to be visibly able to see it?
And that's going to be one of those things that, like, I would say you need to talk to somebody about.
Be like, I was using 4 mirrors. Okay,
Yeah.
I had one mirror here, another mirror there, another mirror there. I could see the whole thing. I was learning.
Record it. Like,
You can record it, yeah.
And
There you go.
somebody's talking to you through the whole thing. You could put yourself unconscious and record it and still get the same.
What's some of the weirdest shit that people write off?
A lot of stuff, people trying to write off stuff for their dogs, and no, you're not going to be able to do that.
What if I pimp out my motorcycle with the shop logo? Can I just write off the whole motorcycle?
Hey, that's a big one too. I know people that try to wrap their boats and try to write that off.
Wrap that boat.
You're not going to get that. You're not going to be able to do that. There might be some accountants that will do it, right? Because doing your taxes is like this. I can put anything I want on there.
Yeah.
It's when it gets reviewed, or if you ever get audited, that's when it's going to come into question.
Right.
So if you wrap your boat or your motorcycle, like, you're a tattoo artist, you don't
Now,
sell
why?
boat.
Why is that not a business expense? Why is that not advertising? If I park my motorcycle in front of the shop and it says, 369 tattoos or whatever.
I would be willing to argue the piece that the wrap itself you could deduct, because it's not much different than a sign, but you're not going to expense the bike,
Right.
or the boat, or whatever.
I always heard the rule is basically if it's not 100% used for business purposes, it's not 100% deductible.
There it is. If you use that boat and wrap it with your emblem on it, but you sell boats for a living, you could get that off.
Right.
But you're not going to do that if you tattoo. Like, it's not going to work like that.
Right.
There's also something I want to share with you, Ryan, that, hey, we've all got TikTok, we've all got social media, and everybody's trying to get famous and say these crazy, just off the wall stuff.
Yeah.
So save money, and this is what the wealthy do to save whatever. Go buy a fucking Land Rover and expense it all in the first year and all this crazy shit.
Oh, yeah.
Listen, one of the first things I tell people is hire me and call me. When you see these things, call me first before you run out and do some off-the-wall shit.
Right.
There is a thing called special depreciation, and there is a thing called bonus depreciation. And you can get those things off sometimes, but as a tattoo artist, you're not going to buy a Land Rover and expense the whole thing in the first year. You're not
Also, that's just a big waste of money. Like Grant Cardone, you'll see him on Instagram. He's like, here's how you don't pay any money on taxes. You just buy 4 private jets, okay?
Yeah.
And then write them off. And you're like, oh, okay, Grant, cool. Just buy 4 private jets. Got it. Like,
Right.
there's so much ridiculous stuff going on out there.
Yeah.
I try to keep it as real and grounded in truth as possible.
Yeah, because we, as accountants, we have this thing called book to tax difference, where we look at what your bookkeeping accounting looks like and your tax accounting looks like. You're right. If you could buy 4 jets and write those off on your taxes, not pay a dime in taxes, that's awesome. But you still had to buy 4 jets.
Yeah.
Like you still had to get into your pocket and pull out money to buy 4 jets. Who
Yeah.
fucking cares if you're not paying taxes on them? You still are out the money for 4 jets.
Yeah. So don't buy 4 jets.
Don't do
Tax. That is tax advice. Now,
Also, I'm going to spin this real quick in terms of like the section 179, I believe, and it's talking about bonus depreciation and expensing an entire vehicle in the first year.
oh
Here's
man,
what this
talk
looks
dirty
like.
to me. Yeah.
Hey,
Bonus
here we go.
depreciation.
Sounds nice, right? So, in a regular world, in a regular business, they buy a piece of machinery or maybe a commercial building or whatever. And in the United States, you then add that to your asset list and then depreciate it over time. Depending on the asset will determine how many years it depreciates, right? So let's say you get a car or a truck or a van or whatever kind of vehicle. Usually the depreciable life is right around 7 to 10 years. So if you buy a $100,000 vehicle and you depreciate it over 10 years, that means you can expense $10,000 every year for 10 years, right?
Yeah.
If you take bonus depreciation and take the full 100,000 in 1 year, that means you have told everybody you fully depreciated this asset. If you then turn around and sell that asset after 3 years, you've told the IRS you've expensed the whole thing.
Right.
Right? On a regular depreciation schedule, you should only have expensed $30,000.
Right.
10 for each year. You sold it at year 3. You expensed it for $30,000, which means you still have 70 left. If you took it all in the first year, you're telling the IRS you've already expensed it, which now means you have to come up with the $70,000 you've already expensed.
Right.
Because now you've told the IRS that vehicle is worth $0 and you sold it for whatever it was worth. So
Right.
not only do they have to what is called recover that $70,000 in depreciation, you also have to pay a gain tax on whatever you sold the vehicle for. So if you sold it for $50,000, you brought it down to 0, sold it for 50, you're not going to pay gains from 0 to $50,000 and recovery of 70,000 in expense.
Yeah.
So like, hey, bonus depreciation is not something that we should talk about on TikTok. Like you need to go have this conversation with somebody so you can really nail down a solid process.
Yeah. 100%.
Bonus depreciation is absolutely useful in many situations. I'm not saying it's not worth it. Every situation is going to be different and you need to sit down with your person and talk about it.
Yeah.
Flat out.
I know that's probably not a situation that a lot of tattoo artists find themselves in, but it is the kind of stuff that people ask. Mm-hmm. So I'm glad that we're at least addressing it here. I want to bring up another one of these questions. So
Sure.
someone asked, and this is someone that's not in the United States, but they ask, how do taxes work when you're an international artist at a tattoo convention in the United States?
I don't know that I could answer that.
Do they need to get an accountant in the United States and file taxes in the United States if they earned income in the U.S.?
Hey, I don't know how to answer that.
Sure. It's probably a question for whoever did your work visa. It's probably a question for the lawyer, and probably, so first of all, if you're tattooing from outside the country in the United States, you probably need to get a temporary work visa in order to do that legally, unless you're flying under the radar, in which case you're flying under the radar. Like, there's no advice to be given at that point. If you're trying to do things by the books, the lawyer, and there is a good company out there, Tattoo Visa. I've talked to them a number of times. A group of women lawyers that do an amazing job. They will be able to guide you on all of the financials for that situation. So any international artists, that's what you would do. What if you're in the U.S. and you tattoo at a convention outside the U.S.?
I mean, it's going to be a similar kind of question, and I can't answer that either because I haven't come across that yet.
Sure.
I will, though. I know it's funny.
I'm sure you can, yeah.
And again, this is just one of those situations that I would have to do the research and know that in most of my days, almost always, when I come across a client, every client's different. Everybody's situation is different. I'm always doing research.
Of course.
Which
is part of what they pay you to do.
And that's right, because again, it's my job to make sure that you're shielded from any kind of risk, right?
Yeah.
And I'm trying to mitigate that risk as much as possible.
I get questions all the time from financial coaching clients or marketing education stuff that I haven't come across before. And the most professional thing to do is say, you know what? I don't have an answer for that right now, or I have an idea, but honestly, I want to do a little bit more research so that I can come fully equipped and get you the proper answer, you know?
Absolutely. And I know that there's definitely things about this because it comes down to any kind of foreign income that you've made, right?
Right.
And there's going to be a piece there on what country that you're from, what their tax rate is.
Right.
Because essentially the U.S. government becomes a fiduciary and they have to report it. So that's about as far as I could go without doing like any additional...
Deep dive. All right.
Yeah.
Well, that was a good question.
But I will look into that so that we can put something together. Maybe you can make a post on that.
For sure. The next two questions are revolving S corporations. So
good.
That's something that a lot of people talk about. Yeah. Very few people know what the hell they're talking about when they're talking about it. And I will also say that not everyone that qualifies or should have an S corporation should have an S corporation. Yes. Because there's so much you have to do to just keep it up to date, organized. Like if you're not the type of person that's going to keep your books straight and clean, do not have an S corporation. It's not going to help you. It's going to be more of a headache. But if you're the type of person that is on top of their stuff, what do you recommend in terms of net income for an S corp? I hear different numbers. I know the number I recommend, but I'm just curious. Everyone says it has a different number.
Yeah. Hey, you're right. Definitely, if you're not ready to put in some serious work and effort into this, like you really should consider that.
But I also saved like $15,000 on my taxes this year because I'm an S corporation. Yes. So like it is a very rewarding. The work you put in can be extremely rewarding, and that's every year I do my taxes. I keep more of every dollar I make because I have an S corp.
Yeah. So let's start there, and I'm an accountant, so I'm always going to give a crazy amount of information. That's just what I do, and unfortunately, like that's what it is. So, if I paint a picture of what it looks like.
Yeah.
So you hear sole proprietors, partnerships, LLCs, S corps, corporations. What does it all mean? Most of those things that I just said are classifications for your business by the state. Okay, and all that does is have a level of protection from liability. Okay. Yeah. When it comes to tax, you have two main categories for being taxed. You have a corporation or you have a sole proprietor.
Right.
Okay.
Most of those things, partnerships, LLCs on their own, don't save you any money on your taxes.
No, it has no impact. An LLC is merely just it's a limited liability corporation, so it provides some protection of you as a business owner. Has nothing to do with taxes.
Yeah.
No. So. You have sole proprietor and you have corporation. An S corp is a hybrid of both. So it allows you to be taxed like a corporation, sorta.
Right.
So here's the big hit. When you are a W-2 employee, Meaning if you go to a job and you clock in and they give you a paycheck and they take taxes out every week, you pay Social Security, you pay Medicare, you pay state, you pay federal, and maybe even a locality somewhere, right?
Yeah.
Your business owner also pays some of those things, but mainly Social Security and Medicare.
Right.
So when someone gets paid, you pay Social Security, Medicare, and so does your boss, your owner. As a tattoo artist, you are self-employed, which means you're responsible for paying both portions. You
Right.
pay both sides of Social Security and Medicare.
And that's why self-employed people pay more in taxes, essentially, is you're paying both parts. You're
That's
paying
right.
the company's part and you're paying your part. When you're a W-2 employee, it's not that they like W-2 employees more. No, all the same tax gets paid. It's just that a portion of it gets paid by the company you work for.
That's right. That's right. So when you elect to be an S Corp, essentially what happens is you have some rules that you have to abide by in order to continue to be elected as an S Corp. And one of those things is you have to go on payroll. So as an owner, you have to go on payroll and you have to pay yourself a reasonable salary. Reasonable is subjective. We can come back to that piece, but reasonable salary, which means for that money that you're paying yourself, the business is paying your portion of Social Security, and then you as a person is also paying your portion of Social Security. So you're not saving anything there.
Right. So
You're paying
me,
yourself.
let's say, as an S Corp, as a tattoo artist, right, I have my, you can have an LLC or a corporation file as an S Corp.
That's right.
And that company that I formed pays me a W-2 paycheck. Let's just say it's $40,000 a year. Mm-hmm. And I get every week or every 2 weeks or whatever, however you set it up, my paycheck. And out of that paycheck comes the taxes, both the company's portion or the company pays theirs on their own. My portion is taken out. So all the same amount of taxes that I would normally pay as a sole proprietor.
That's right.
Are still coming out of that $40,000. I haven't saved any money on taxes yet.
That's right.
Yeah.
Not yet.
Not yet.
Not yet.
Now, how do I save money on taxes?
Now, after that, you can do what's called a shareholder distribution, an owner's draw, whatever you want to call that title. I've heard it said many things.
I have too. Yeah.
So you're paying
and I
yourself.
had some accountants say, no, it's not that. It's that. And I'm like, but I've heard it called a distribution or an owner's draw.
Yeah.
Whatever you want to call it.
Distribution's probably the better way to actually call it, and we'll get to that whatever.
Right.
But so you're paying yourself $40,000. I recommend my clients to, if you're going to elect to be an S Corp and you're going to make distributions, try to limit those distributions just so it's cleaner. Maybe once a quarter, twice a year, something like that, right?
Yeah.
But basically,
I heard that the regularity of it, so just the way I have mine set up is I pay myself a W-2 paycheck every week, and I have a dividend. We call it dividends. So dividend distribution, whatever you want to call it. My dividend is also paid weekly.
Yeah.
It's the same amount every single week.
Yeah. Nice.
As long as it's kind of consistent, that's all the IRS is really. You can't. You know how normal tattoo artists, if you have a business account, you're just pulling money in and out while willy-nilly. You can't do that. You basically make the same amount of money all the time, no matter how much money your business makes. Ideally, something kind of like that.
Correct. So you're paying yourself $40K. In your case, you're giving yourself a dividend check every week or bi-weekly.
Right.
But essentially, those monies are called a distribution, and they're taxed all the same rate, except you're not paying that employer portion of that Medicare and Social Security.
Right.
So you're saving on that self-employment tax.
Exactly. So usually I say 80K is where it starts to really make sense. Would you agree with that?
I've had people say 100, and I've had people say 60. So that's the range. That's the range. And the big reason is when you come to me and I have to file your taxes, it's going to cost you more for an S Corp.
Right. So technically you will save money as an S Corp on your taxes at $60,000 net, not gross, but net after expenses.
That's right.
But the amount of money you'll pay your accountant to file the K-1, the additional tax return, plus you have to hire someone, whether it's your accountant or a payroll service, to run payroll for you. And after all of those additional expenses, it pretty much becomes pointless to operate as an S corporation. if you're only making 60K a year. That's why I say 80 is where you roughly save $6,000 on your taxes at 80K. Then you got to pay a little bit extra, so maybe you're saving 4 or 5. But that's 4 or 5 grand that would normally go to Uncle Sam that you get to keep in your pocket, you know?
That's right. And there's some other benefits too. So yeah, you're right. The amount you save on taxes definitely has to offset those additional costs in payroll and accounting fees.
I'm going to get right back into it, but real quick, I wanted to let anyone who's feeling uncertain about your financial future know that, one, you are not alone. I speak to hundreds of tattooers and artists, small business owners all around the world every year, and it's very common to feel overwhelmed, confused when it comes to saving, investing, taxes, and all that stuff. And two, if you're looking for help with this stuff, I want to make it very easy for anyone who is serious about taking control of their financial future to book a one-on-one call with me and get clear around what actions you can take to build financial security and freedom. So if you're interested in that, or you know someone that might be, you can hit the link in the show notes below to book a one-on-one financial future session with me personally. Now, I do charge a small fee for this, but I want to make it as accessible as possible. I also want to note that I take about 5 or 6 of these calls per month, so availability is limited, but I would love to get to chat with you and see how I can help. I think one of the coolest benefits of an S corporation, besides the tax savings, is that they are one of the least audited business entities out there. You heavily reduce your chances of being audited as an S corporation versus a sole proprietorship.
That's right.
Yeah.
And that's because of all the rules that you have to follow in order to...
And that means you can just buy all the jet skis and wrap them up and, you know, buy a dog, a whole crew of dogs, write it off. No, that's not what that means.
Yeah. It also means, like, and I push this to make sure that we're not being audited, right? That if you're going to be an S corp and your tattoo money's coming into your bank account, I don't want to see you using that bank account to buy movie tickets.
No.
Right? Like,
what if you're doing research for a tattoo?
Research for a tattoo? I guess it depends on what kind of research, but like, I would support that, I think. Again, it's just another conversation that we would have, but...
Right. As long as you could reasonably, with a straight face, tell an IRS agent, because I didn't go to the movies, but I did a tattoo for the movie The Thing. It's like an old ass horror movie. Yeah. And I had never seen it before. I was like, well, if I'm going to do a tattoo for it, I better see the movie.
Oh, I mean, yeah, that checks out. Yeah. But what you can't do is you can't make your house payment out of your business account either.
Right.
Like, you can't do that. Now, if you do and we find it, like, you know, we can make it as a distribution and, you know, put it out the way and clean it up. But that's what we're saying is, like, it has to be clean, right?
It has to be clean. It has to
same thing with your credit cards. Any credit card that's owned by the business, it has to be clean.
Yeah.
Where it also has to be ultra clean is if you're an S corp with multiple people. Because if you're paying out of the business account and you're making your house payment, like, that will affect your basis in the business, and that can get really ugly.
I feel like very few people will be in that instance, because let's say there's 2 people that own a shop, okay? And they're like, cool, how do we do an S corp? This is what I would tell them. Again, this is not tax advice, but what I would say is have the shop owned by an LLC that pays your S corporations, and then you each have your own separate S corporation.
And you can do that. And I've known people and I say known people, I've read and done taxes where it was like the other way around. And it really just depends on how you want your money to flow.
Right.
I would say in most situations, most people keep them separate instead of having one feed the other. Because like an LLC is all flow through entity. So all money that comes into it has to be paid tax. So once it flows to the
you essentially have all the money. That LLC doesn't make money. The LLC is just literally a pass-through entity. That money passes through into 2 separate S corporations that pay out individual payrolls and take separate distributions. And that way, you don't have a convoluted team unless you know you're married to this person. Honestly, it's easier to get out of a marriage than it is to get out of a double-teamed S corporation.
That's right.
Yeah.
Yeah. Hey, you're right. Hey, that can be a very ugly situation. Absolutely. And honestly, like, to get into a partnership with an S corporation, like, you need to have attorneys involved because, hey, you see people get involved and it will trash a friendship. It'll trash a family. Like
Yeah.
you need to go in and have your operating agreement laid out. And that's a whole nother topic. But one thing about S Corps too that is super awesome that we probably don't talk about enough is you now have the ability to like contribute to a 401k, a Roth, and whatever, and all that stuff is going to continue to reduce your tax liability as you're putting it into a retirement account.
Sure. I mean, you can do that outside, but you wouldn't have the 401k.
Right.
And 401ks actually have some unique benefits versus, and I can do a whole fucking talk because I worked as a licensed financial advisor. I had to study to get my Series 65. I know retirement accounts. 401ks, the cool thing versus an IRA is you can actually borrow from your 401k, whereas your IRA, once that money's in there, it's locked up.
Right. Yeah, and because you're on payroll, because you are part of an S Corp, you can contribute money to that before it's been taxed and then pull it out later in life.
Exactly.
So, hey, you're right. That's a whole nother topic that is super exciting to talk about. And it sounds so crazy to even think like, 401ks and fucking taxes and all this shit is exciting to talk about. Listen to these two go on and shit.
Dude, I love talking about this stuff. There's going to be very few people that listen to this episode all the way through. But for the ones that do, like, I love talking about this stuff. And I want people to catch the bug because when I tell you I fucking hated talking about this stuff, it just sounded like wah, wah, wah. But like, I got excited about taxes and learning the tax code because everyone's wondering, how do I make more money? It's like, why don't you wonder about how do you keep more of the money you make?
There it is.
Then you don't have to worry as much about marketing. You're worried about, oh, well, if I'm paying so much of every dollar I make, how do I keep more of every dollar I make? That's a lot easier to do than getting a new client.
Yeah. Hey, absolutely. And I wasn't always an accountant. I didn't start doing that till later on in my life. I worked on blacktop crews, all through my 20s and early part of my 30s. So none of this stuff was ever exciting to me. And then when you start learning this, right? And now I can share this with other people. And this is the piece that I hope people also get excited about is like, hey, y'all have a craft that is special. It's amazing. I love working with artists because I'm not fucking artistic. So it's cool to be around people that are. But people that your story is your story. You learned it where you learned how to tattoo, wherever you learned how to tattoo. And now people are turning it into something that they can feed their families and actually create generational wealth. And if they can play by these rules and use these rules to their advantage and learn how to play the game, man, you can do so much with something that you fucking love to do.
Yeah.
And that's the exciting part. That's where it takes you to a different level of just, doing 100,000 flash pieces in a year to like doing a badass piece that you enjoy doing and then using that money to benefit you later on.
That's
the exciting part, man.
Have every tattoo you do make money babies that make money babies that make money babies over and over and over again.
Yeah.
Last question about S Corps, but it's also about healthcare. The question was, what's the cheapest way to get healthcare with an S corporation? Now, I actually had to go through something with this past year. I don't know. Basically, what I had to do was I was paying my health insurance because I pay for health insurance. I don't get any benefit or anything. I don't, I make too much money to get any aid. Yeah. So I pay. It's not terrible. I pay like $650 a month for health insurance. And I use the fuck out of it. I go see a therapist. I go to the dentist. I make sure I get everything I can out of that money that I'm paying.
Yeah.
And then, but I wasn't paying it from my business account. But because I'm an S Corp and because I pay myself a W-2 salary, I had to reach out to my payroll and say, hey, this is how much I paid in health insurance. Can you add that to my W-2? And then I had to add the payments from the company. I had to do some weird shit. On the back end, it looks weird. On the front end, it's fine.
Yeah.
And that's sometimes the case with bookkeeping and taxes. Is like, as long as on the front end, it's good. It can be a little bit, you know what I'm saying. It can be a little bit weird on the back end. Yeah.
Yeah. Yeah. Because ultimately, if you're an S Corp and you're going to be the only person that works in your S Corp, you're paying yourself payroll, you pay yourself your gross pay, and you're taking out some things that come out before it's taxed, right? Like your 401ks and stuff. So all that stuff has to be tracked. And then those payments have to be submitted to their appropriate people.
Yeah.
So if you continue to have employees that you're paying, whether they work the front desk at your shop, or maybe you hire somebody, you got them on payroll and they're cleaning, or whatever that looks like.
Yeah.
Like the same deal goes to them. So if you've got 401k plan and you offer them a plan that says, hey, if you contribute, we will match it a certain percentage or whatever. Now they're contributing and you contributing, and all of it is absolutely doable. And it can be confusing, but you don't have to do it.
There's some cool things you can do with that. So like, let's say you want to offer your tattoo artist, and I've seen a couple shop owners offering their tattoo artists retirement plans. Okay. Mm-hmm. Well, how does that benefit? You might want to ask yourself, how does it benefit the business to just give them free money into their retirement plan? Here's how it benefits the business. One, it is a deduction, so you're not paying taxes on it. Two, you do what's called a golden handcuffs clause in the 401k plan. So what that looks like is, let's say I'm paying you 4% of what you made into your 401k, up to X amount of dollars or whatever. You can put a limit on it. Now, what I can set up is that money, let's say it's $5,000 a year extra that I'm putting into your 401k plan. I can have that what's called vested over X period of time. Yeah. So 5,000, 5,000, 5,000, but I can set it up where only 25% of that is actually yours to keep if you were to quit in the first 3 years.
Right.
So I might have put $10,000 in, but you're only allowed to keep 25% of it if you quit in the first 3 years. After 3 years, 50% is vested. After 6 years, 75%. After 8, whatever years, then 100%. So what it does is you can reward your artists for sticking around. Give them something really because that $8,000 that was contributed over X many years, compounded interest over the next 20, 30 years becomes, $30,000+. Yeah. And I don't have to worry about hiring a new artist. So I'm rewarding you for sticking with me, and I don't have to go through the whole rigmarole of the churn of having to find a new artist and train them up, and that's a headache. So there's some real benefits to operating in this way and actually, contributing to your tattoo artist's future.
Hey, I mean, absolutely. All of that is fantastic. And I think, back to our original conversation with this person that I met with, that was, 60, 40%. And,
yeah.
Considering whether they leave the shop and get their own or whatever that looks like. Everybody can leave today and go get their own shop, right? But that shop owner that's doing all of these things for their people and helping them in whatever manner that is, like, I feel that there are artists out there that don't want to be shop owners, but want to be part of something. And if you've got a shop that they're taking care of them financially, giving them these benefits to them that they don't have at any other shop, and then also offering, and this is the part I cannot attest to, but those people that offer to help develop them as an artist, those are going to be the shops that everybody wants to come and work at.
Yeah.
And when you got a shop that everybody wants to come and work at, you get to pick and choose who comes. Yeah. And then those clients want to come, so it's a whole thing, right?
It's a whole thing.
It makes sense to me.
That's the game of business. And so few tattooers have taken the game of business very seriously. They're just do good tattoos. But there's all this cool shit that information is power, knowledge is power. And when you know the tax code, and when you know how to structure business entities and benefit plans, health insurance, that kind of stuff, you're really playing the game of business. And ultimately, the person who knows how to play the game of business best will have the best business, regardless of everything else. Obviously, there's a certain extent of you got to have good skill, you got to have good talent. But there are businesses that might not have the absolute best tattoo artists in the world, but they're doing great because they're offering a good service, they're offering quality tattoos, and they're turning a higher profit because they know how to play the game of business.
Yeah, they couldn't agree more. And I think, what you've really displayed here is any artist that is trying to elevate and go to a new level. And I don't mean to imply that every artist does. Hey, I have a couple of artists that all I do is their taxes, and they're like, hey, I just want to live out of my guitar case, and I got my grocery bag full of clothes, and I hit the road, and that's all I want to do. And that's fine. And I'm not here to tell you otherwise.
Totally. There's nothing wrong with any of it.
Yeah. If that's what you want to do, I will help you do that. Whatever that looks like. But if you are trying to go this direction and you are trying to elevate, I think the key piece here is knowing to have these different people that you consult with to develop your business. I'm not a marketing guy. I've had to come to you and ask you for plenty of advice and information on how to market my business.
Yeah.
Right? So I know my limitations and I seek guidance in those areas. My area is the accounting and tax part. So when you want to develop your business and you're going to buy your own shop, hey, I can't tell you prime real estate and what that looks like. You need to go talk to a real estate agent and get that information.
No one does this stuff alone. And you're not expected to. You're really not. And that's, I think, in tattooing, but in general, a lot of people outside of tattooing feel like, oh, I don't need help. I'm going to figure this out on my own. I'm going to do this. And the truth is, no one buys a house on their own. No one.
Right.
They talk to real estate agents, financial advisors, tax accountants. They talk to business experts. No one retires on their own. They speak to a professional. No one that does anything big in their life, especially financially, and let's just be real, anything big, does it purely alone. They seek the guidance, the help, the support of someone that knows more than they do so that they don't have to pay down the ignorance tax of not knowing what the fuck they're doing and then just paying that down year after year because they don't know any better. Meanwhile, they could have sought the expertise of someone that knows what the fuck they're doing and, not had to pay that ignorance tax.
Yeah, you hit it. Like, when I started learning how to be an accountant, right? Like, I didn't go talk to the expert tattoo artist and try to figure out accounting. I had to go to the people that knew that information. And it's the same in reverse, right? Like, so, man, I couldn't agree with you more. I couldn't agree more.
The most expensive tax, in my opinion, is ignorance tax. I'm doing a business and I don't know how to play the game of business. And so rather than seeking advice from people that know what they're doing, I'm going to figure it out on my own. And to do that, I'm going to pay the ignorance tax. You pay either way, whether you pay an expert or you pay down ignorance tax. It's expensive both ways. Just one way you learn a lot more quickly.
Hey, absolutely. Couldn't agree more. And I definitely tend to, when it comes to that ignorant tax, you watch people, you make your mistakes, you learn from that. I definitely try to stay away from, the 10 ways to become a millionaire books and the self-help pieces. You want to talk to somebody that has been successful.
Yeah,
and whatever
ideally.
it looks like.
There are some good books out there, but if you can talk to someone that's living the life that you want, that you've seen proven, you're going to get some of the best advice from that person. Yeah.
Yeah, I agree. And I think when it comes to, and reading books is certainly not a bad thing. I definitely do my fair share of it.
Do you have any books that you like, money books that helped you out?
I don't have any specifics, and I don't remember the titles because I just don't remember it like that.
Yeah.
But I've certainly read plenty of Dave Ramsey's books.
Yeah.
And man, argumentatively, there's something good in every book. Right? Like there's something to take away from everything that you read. Yeah. But if there's 10 chapters of a book, there's always going to be some filler and then some really solid points. So there's discernment with everything that's absolutely crucial, in my opinion.
That's why I like authors that are not just knowledgeable, but they're good writers. They're good authors because they'll keep you engaged the whole time. Morgan Housel is one of my favorite authors. He's written a lot of books on money, particularly the psychology of money, but he tells it all through stories, and so you're interested, you're captivated the whole way through. Believe it or not, Tony Robbins has a really good book on money called Money Master the Game. It is a little bit more about investing and long-term stuff, but that was a book that, and he talks to people like Ray Dalio and these, very experienced money managers, and but it is it's one of the first books I read when I was first studying investing and long-term wealth planning, and I could understand it from a Neanderthal tattoo artist brain. I was able to comprehend what he was saying. So,
and one of the things, like, I kind of stumbled for a minute, and it's true, like, what money books have I read? And I mentioned Dave Ramsey because obviously he's super popular. So who has read some? But ultimately, I can't say that I've read any books that dealt with the mindset or the psychology behind it. I just haven't. So everything.
Well, I'm all about that. So I recommend a whole bunch. The Psychology of Money is a good one. There's one called The Illusion of Money by this guy Kyle Cease. He's a comedian. Which he just has a good sense of humor. Yeah. Brilliant book. There's a book called The Art of Money by Barry Tesler. She's a therapist, but she's a money therapist. Like, that's her main area of expertise. Okay. I read so many books on the mindset, on the relationship with money, because I found that just the practical stuff doesn't get me where I want to go. It doesn't give me the peace. It doesn't give me the freedom that I want to have around money, because I think you can be financially free and not have millions of dollars in the bank.
Sure.
Because you have freedom around money. That, to me, that's financial freedom.
Hey, absolutely. And you're definitely not wrong. The majority of the stuff that I've read and that I've consumed over the past, since I started working in accounting, since I started studying accounting, they've all been courses, manuals, and the studying of the technical application of these things. And I'm far from being an expert, so I don't want to make that kind of implication. But even when I wanted to start learning about investing in stocks and bonds and those kind of things, I chose at the time a trading platform that had that type of education, so I could dive into that.
Yeah.
Even when I started bookkeeping independently instead of for a large business, I chose a software that had courses and material that I could read and study on. But to your point, like, no, that doesn't help with the mindset. That doesn't help with none of that. So it's certainly, again, another all-encompassing piece. It's not enough to just have one piece.
I couldn't apply the strategies and feel competent and excited about talking about taxes and investing if I didn't first deal with the internal conversation, the mindset, the nervous system, all that stuff that comes up when money is emotional. You can't escape it. And I think a lot of accountants and financial advisors don't acknowledge that. I have an accountant that I work with. I don't know if I'm going to keep working with her. She's all right. I don't think she listens to this podcast, so whatever, fuck her. But she's just like a robot, dude. She's like Chat GPT, and she's like an FBI agent. I feel like when I talk to her, I feel like I'm talking to an FBI agent, and I used to think I wanted that, but like, it was, if I don't ask the right questions, she doesn't give me the right answers.
Yeah.
And I want someone that can really hear me, hear what I'm talking about, hear what I'm looking for, relate to me on some type of way, someone I could shoot the shit with, someone I wouldn't mind going and grabbing a bite with. Yeah. That's the kind of person I want to talk about my money with, to be honest. And so everyone's got their place, Yeah. But yeah, I'm always like, so anyway, I feel like you and I, we vibe, like, this is great. If anyone's looking for that type of a relationship, which I think you should, in an accountant, I think people should definitely reach out and have a chat with you. I think they'd be very pleased. How can people reach out, and if anyone's curious and wants to talk taxes?
Hey, so I have to comment on the robot part. Like, when I finally finish my degree, like my first degree, there's a path that you're supposed to take, right? So I went into public accounting, and I was working for a firm, and I had to wear my suit and all this, and
you couldn't wear your hat and your
the visor. No, I had a very fresh, like, faded hair and very high and tight, and it was even my LinkedIn profile picture until about 3 weeks ago, right? And so I had this job, and it was like, and again, I started this later in life, so all of my peers at my level at that firm were all 20 and 21 years old. And, you got to go through the pecking order. You become an accountant, and then you're a staff accountant, and then you're a senior, and then you're a manager, and you're pushing to make partner and all this stuff. And I'm like, man, I'm not for this. So I went and started working what's called private accounting or industry. And that just merely means that I went and worked for a company in their accounting department.
Right.
Instead of doing taxes and bookkeeping and audits, I went and worked internally for a company.
Right.
And then I became corporate world. So I worked for a company that was, part of the Fortune 100. They made private jets and stuff.
Right. That's bigger than the Fortune 500, or companies that are bigger than the Fortune 500 or in the Fortune 100.
That's right.
Yeah.
That's right. Government contract, all kind of stuff. And, I thought that was cool. And I mean, this company was as big as Google. And all it did, instead of wearing a suit and tie, I just had khakis and a polo and a bat,
Right.
And quite frankly, I just fucking cussed too much, and I got too many, tattoos for that shit. And I just, it just wasn't for me. And the last firm that I left, I had to wear sleeves every day, and I live in Savannah, Georgia. It's fucking hot. And anyways. But yeah, that's how they are. And I can't say that I'm not completely black and white when it comes to numbers, because I certainly am. I just, I also know the importance of being able to connect with somebody.
So
and
important.
I know when somebody calls you and they're like, I haven't filed my taxes in 5 years.
Yeah.
You know what I mean? They're absolutely fucking ashamed, and they don't even want to say it.
Yeah.
It doesn't do no good for you to say it to a stencil of a human being.
Right. You gotta comfort someone in that moment. They're feeling ashamed, and you'll be like, look, I've seen this before. I just want you to know there is a path to working through this.
That's right.
And we're going to navigate that together. I got you. Grab my hand. We're going to get through this together. You don't have to do this alone. I got your back. That's really what someone needs in that moment. That's
right. So yeah, and that's what I'm here for. I've even told people in terms of accounting for tattoo artists and stuff, it's not nearly as profitable as if I filed taxes for 7 car dealerships or did the bookkeeping.
Oh, absolutely not.
Right? But at the end of the day, I'm connecting with individuals and I'm helping them take their business or their craft to a new level. And that's fucking awesome. I've got 2 clients now that I've been working with them for a couple of years, and they're like, just the fact that you do all of this shit for me and I don't have to worry about none of it. It's a huge just weight off of my shoulders.
Yeah.
And that's what I'm here for. I love this nerdy shit, and that's fucking crazy. But me being able to do this for you so you can do what you love to do is awesome. And I get to see all your work, and that's cool. So how do people get a hold of me? I mean, we got an Instagram, we got a Facebook.
We'll drop all the links and stuff like that in the show notes. So
email address, yeah.
Can someone just DM you? Is that all right?
Oh,
okay.
Yeah. Yeah,
cool. Awesome. Yeah. And they might catch you at a convention soon, right?
Yes. So we're going to be at Evergreen here this coming weekend.
Yeah.
We were just.
This will probably launch before that. So yeah.
Yeah. That's right. We were at Sign in Dayton the week before last, and the week before that we were at the Macabre in Atlanta. So we definitely have enjoyed traveling and seeing people and getting to know people. Split a booth and hang out with people all weekend. It's super cool. It's been a lot of fun.
Awesome, dude. Well, keep it up. The world of tattooing needs more accountants that care, that can relate and help people out. There's no shortage of tattoo artists that need it. So if someone needed help right now for 2024, could they hit you up?
Absolutely.
All right. Excellent.
Yeah.
Cool, man. Awesome. Adam, it's a pleasure. I look forward to chatting more with you in the future, and maybe we'll collaborate on some stuff. But yeah, it's a pleasure having you on the podcast.
Hey, same. I appreciate the invite. This has been a good time. I appreciate you, man.
All right, if you found this episode helpful, one of the best ways for you to help other artists is to share this episode. Leave a review and subscribe. It helps other people find my channel, and you never know what a difference it might make for someone else. Plus, I will forever be grateful for your support, so I just want to say thank you and have a great rest of your day.